What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw the Nasdaq 100 leading the way with the rest of the indices selling off. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we went down 0.25% today, but we did have a very bloody gap down open. From yesterday's close to the open today was over a 1.2% gap down, so it could have been a lot worse. Only closing a 0.25% lower after a monster gap down like that is actually a good indication that people stepped in and did buy the dip. We did see an increase of volume, so there was definitely a lot of people that went shopping today and did try to buy up the dip. We have critical support still at that 50 EMA, which is still right around 407, but we also had a lot of support around this area. We had a critical support level right around 406. We have two support trend lines that go right around that level as well, and don't forget, just below that, we do have a gap to fill. So the fact that that gap was not able to be filled is actually a very bullish indication, with the price action being able to hold up over that critical support. Remember I said last night that there was no guarantee that we would hold up above the 50 EMA on the second test, but today proved that we still can hold up above that support level. So there's without a doubt buyers stepping in around the 50 EMA, and eventually that should mean we could see SPY start heading back higher from this level. Now this is just one day, and don't forget we're still in somewhat of a weak market. The price action is still below 3 of our moving averages here, and we do have negative moving averages except for the 50 EMA. So this is by no means a strong market anymore, and it is starting to show some weakness, and it's starting to show that it is losing momentum. However, as long as we're trading above that 50 EMA at 407, there's still hope, and remember we're still trying to see if we can form this higher low and continue to try to push back higher for another all-time high. So the critical resistance levels are still going to be the 412 level and that 20 simple moving average right around 416. Remember, today we did close below 412, which does mean that the bulls are losing their strength and they're not able to hold up above critical support levels. So that's one critical support level down, and the next critical support level to watch for is right around 406. 406 and 407 have a lot of support, but the most critical support level to hold above will be 406. Because if 406 does break down, it's going to be a very quick path to close the gap at 400, and the support level below that is right around 398. Below 398, SPY is going to be officially in a bear market, and it could continue to go much lower. So right now you can see there's a lot of critical support, but SPY is still continuing to pass the test by bouncing off of those levels. We also did still have a little bit of that gap left open above, which will close right around $411.65. So we still have plenty of gaps to fill, 2 to the upside and 1 to the downside. And it's only a matter of time before we see who's going to win this battle between the bears and the bulls. Remember that the bears do have an advantage right now, but the bulls do have a very critical support level just a few dollars lower at 407. So this is a pretty decent risk reward trade setup around that 50 EMA, knowing that your risk is defined on a close below 406. Next up is the Nasdaq 100 triple Qs, and we see the triple Qs closing in the green today, going up 0.11%. That's actually very impressive because the triple Qs did gap down about 1.7%. They gapped down right near that support level at 316 and then just started to run, continuing to go higher all day long, closing near the high of the day around 322.59. Now the significance of the close on the triple Qs is we did close back above that critical support level at 322. So that 322 support level is critical, and the bulls were able to push the price action back above that level. So that will be an advantage for the bulls going into tomorrow's trading session to have support that close to the price action. Remember how a risk reward trade setup works is the closer you are to your risk level, the better the reward is going to be. So setting your risk right here at 322, knowing that you're going to try to trade to that 50 EMA right around 327.5 is a pretty decent trade reward. Also remember, we still have this upward trend line on the triple Qs, so we did have quite a significant amount of support at that open level right around 316. That support trend line will be right around 318, and it is increasing day over day because it is a positive sloping line. If we break down below 316, the bears are going to start taking over, and there will be a gap to fill right around 315. On a break below 316, the bears have full control, and you're looking for price targets of 311 and 305. The upside critical resistance levels are going to be 326, 328, and that 20 simple moving average at 330. On the Dow Jones, we dropped about 0.5% today, and we are closing back below the moving averages, and we did test support at that 50 EMA today. The 50 EMA support level is right around 335, and we did get a positive bounce off that level, and we did close higher. So we still have support below at 337, 335, and if we break down below the 50 EMA, we're likely going to close the gap at 331.6. Upside resistance is going to be 341, 345, and the gap close right around 348. On the Russell 2000, we dropped about 0.75% today, and we did close back below the 5 EMA. The Russell 2000 also fell out of that support trend line, which was causing the Russell 2000 to be within that wedge. So right now the Russell is still looking weak, and it does look like it can try to continue to head lower. Critical support on the Russell is 215, 209, and the support trend line around 207. Upside resistance will be the trend line at 219, the 50 EMA at 221, and that 20 simple moving average at 222. As you can tell from the Russell 2000, it's looking weaker, and these moving averages are starting to stack up to the bear side if the price action does continue to fall from here. On the Arkk ETF, we dropped 1.74% today and still failing to close back above that 5 EMA. Remember, Arkk is in a bear trend and it's in a bear market, and it has critical support at $97. If Arkk breaks down below 97, it's going all the way back down into the low 80s, so it does mean that this is a high risk support level if it does break down. Critical upside resistance levels will be the 5 EMA at 104, the resistance levels at 106 and 109, and that 20 simple moving average is sitting up here around 112. Remember not to get overly bullish on the Arkk ETFs until we see some sort of support found, a bottom put in, and then a trend reversal. On the VIX, which is the fear indicator, we see the VIX going up about 4% today, closing at 22.2. We did see resistance right there at that 24.8 level, and we saw the VIX fail to break out. The VIX is still trading over 21.6, so we still do definitely have volatility in this market. Remember, as long as the VIX is over 20, we're going to have a choppy and volatile market, and it's going to be chop city and whipsaw city out there. Remember, you don't want to be going and getting whipsawed in this market, and you don't want to be switching from bear to bull at the worst possible moments. Have a very strict trade plan and follow it closely, because we still have volatility, and that's exactly what the VIX is telling us, sitting at 22. Remember, if the VIX gets back over this resistance level, that's going to be an extreme wave of selling and a much deeper correction. We need to see the VIX getting back below 20, and that will tell us that the volatility is ending, the correction could be over, and we could be going back into a renewed bull rally. But right now, until the VIX gets back below 20, it's still a risky and volatile market, so keep that in mind. On gold, we did get up to our next price target today at 1876, but we do see that level acting as resistance. We need to get a breakout of 1876 to get to the next price target at 1923. We will have downside support at 1861 and the previous price target at 1829. On silver, we did fail to hold that breakout level today, which was right around $28. It looks like support is holding up at 27.6, and we need to make another attempt to try to break out of that $28 level to get to the price target at $29. On Bitcoin, we had a very interesting day today, and we finally did get that waterfall wave of selling that I've been talking about for about 2 months now. Remember, back at the end of March, I said that Bitcoin was way too overbought and way too far overextended, and it needed to go through a major correction of about 50%. Remember, the key to knowing it was going to drop over 50% was a break below support right around $41,000. So from the highs to the low where we ultimately found support was a 52% drop, and we found support right around that $30,000 support level. So that was actually a great trade setup if you had your limit buy set, because it did happen very quickly and it was a monster bounce. Off of that support level, we saw Bitcoin bouncing. At one point, it was up over 30-something% right off of that support level at 30,000. Now remember that Bitcoin is going through a correction, and even though this flash crash was a great buying opportunity, it doesn't mean that the bear market is over. Bitcoin is officially in a bear market because we saw that 20 simple moving average crossing back below the 50 EMA. So all of these moving averages are now stacked to the bear side, and Bitcoin will likely be sold at resistance levels and continue to head lower. So you still can't get into Bitcoin at these levels thinking there's no risk to the downside. It's still possible Bitcoin can go lower, but that $30,000 support level was a great buying opportunity. We will have more support levels below 30,000 that I will be bringing to you very soon, but do know that your upside resistance levels are the previous support at 41,800 and 45,000. This is actually a good thing for Bitcoin to go through this correction because it was getting way too far extended, and seeing Bitcoin at these lower prices should get more people interested in buying Bitcoin, and it could restart a brand new bull rally to finish out the end of the year. So I am expecting to see Bitcoin have a weak summer, and we will have more price targets for you coming very soon, so you know exactly what to watch for on Bitcoin. Next up is Amazon, which was pretty much flat today, and we did hold up above that critical support level at 3209. Remember, support is 3209 and 3138. Our upside resistance levels are 3256 right at that 50 EMA, and the breakout level right around 3350. If Amazon can break out of this resistance trend line, it could start running as high as $3,800. On Tesla stock, we dropped about 2.5% today, and we did close over that critical support level at 557. Remember, on Tesla, I'm going to make it very simple for you, and you want to get out of Tesla on a close below 557 because it could be going back into the 400s. Critical upside resistance levels are 594 and 633. On Apple stock, we're still stuck in this downward parallel channel, and we still see Apple stock basically going nowhere, only going down about 0.13% today. Apple's below all of the moving averages, and it is starting to look weaker by the day. And if it does break down below 123, it could be coming all the way back down to 119. We need to see Apple break out the upside of this channel and start closing above resistance at 126 and 128. Until Apple can get back above 128, it's not going to be able to get into any sustainable bull rally. On the financial sector, we dropped about 0.6% today, and we're still holding on to the bullish trend, and the price action still closing over top of a positive sloping 20 simple moving average. On the industrial sector, we dropped about 0.5% today, closing back below that 20 simple moving average, and we're starting to lose the benefit of the bull trend. On the healthcare sector, we dropped about 0.17% today, still closing over top of the 20 simple moving average and still holding on to the bullish trend. The energy sector dropped about 2.5% today, and it did bounce off of that 20 simple moving average of support. It's still in a bull trend, and it still could continue to bounce and head higher from here. So going back over to the S&P 500, you can still see that the sectors are still holding up very well. We are starting to see weakness in the industrial sector, but we still have strength across the board. We could have saw the very early signs of a bounce in the tech sector, with the tech sector actually performing very well from that gap down open. However, it's still way too soon to get overly optimistic about another bull market until we start breaking back above some of these critical resistance levels. Remember, the market is weak right now, but it is holding up above critical support. And as long as it's holding up above critical support, a new bull rally could come from this correction. Remember that after a correction in a bull market, you usually resume the trend, and in the larger degree, we are still in a bull market. If you look at weekly and monthly charts, you'll see exactly what I'm talking about. And remember, we're just doing day-to-day analysis, and we're taking it one day at a time, and we're staying objective about the price action. So until we see SPY breaking back down below this 50 EMA at 407, there's no reason to think that this bull market is going into a bear market. We need to see the price action confirm, and we need to see the market roll over before we say this is going to be a bear market. It's a volatile market, it is a choppy market, and there's going to be plenty of whipsaws out there. So make sure if you don't know how to trade this market, you just take a break from trading until there's some clear defined trend in this market. Also remember from my Sunday video, there's a lot of risk coming into next month about in the middle of June. So if you haven't yet watched that video, go check it out. Also remember on the Stocks Channel Discord, I'm doing intraday analysis and updates to always help you stay on the right side of the market. I'm also bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.